number seen at 7.5%. It will be official on Monday. And speaking of what to watch out for, the Reserve Bank of India will announce its fifth bi-monthly policy on Tuesday. The market seems to have factored in a pause. Ritu Singh, who polled treasury heads and economists from across India's top banks, reports on what we can expect from Governor Rajan.
Raghuram Rajan's surprisingly generous rate cut in the September policy has weakened the prospects of another such gift anytime soon. All the top economists and treasury heads polled by CNBC TV 18 chimed in a unanimous pause by the governor as far as their expectations from the December policy is concerned. And it comes as little surprise after Rajan's warning last quarter of RBI front-loading the cut.
The coming pay commission report could add substantial fiscal stimulus to domestic demand, but the government has reaffirmed its desire to respect its fiscal targets and improve the quality of its spending. Under these circumstances, the Reserve Bank intends to be accommodative to the extent possible. Therefore, the Reserve Bank has front-loaded policy action by a reduction in the policy rate by 50 basis points.
According to CNBC TV 18's poll, the key repo, cash reserve ratio and statutory liquidity ratio rates will remain unchanged in this policy. However, this will not be the end of the rate cut cycle. An overwhelming 90% of the respondents to CNBC TV 18's poll say RBI will remain in an accommodative stance. While 10% expect no rate cuts from now till the end of next year, 30% expect a 25 basis rate cut and 50% expect a 50 basis point cut. The governor's tone will be as keenly watched as the policy statement itself, and 55% expected to remain more or less neutral like in the September policy. But owing to the risks from the eventual Fed liftoff and the possibility of the government missing the fiscal deficit target with the hefty 7th Pay Commission recommendations, 45% expect the tone to be more on the hawkish side. The retail inflation target for January 2016 is expected to be maintained at 5.8% by a majority of the respondents. All respondents also believe the GDP forecast for FY16 will be maintained at 7.4%. This has been an eventful year for the domestic markets, with a 125 basis point reduction in benchmark rates by Raghuram Rajan. But going by CNBC TV 18's poll, the end to the year is expected to be rather quiet. In Mumbai, Ritu Singh.